Ladies and gentlemen, welcome to the Reuters Islamic Finance Debate. Thank you all for joining us. My name is Bernardo Vizcaíno. I'm the chief correspondent for Islamic Finance at Reuters News. And it is my pleasure to moderate this morning's session. Just a bit of housekeeping, perhaps, is that we've made a bit of a calculated risk here in that we want to, theory is essential and very important in Islamic finance, but we've made a bit of, we want to focus the discussion on practice and current market reality. So to do that, I'd like to introduce our panelists who will guide us through the most recent developments and especially what comes next for the Islamic finance industry. First of all, I would like to invite to the stage Mr. Joaquim Levy, Managing Director and Chief Financial Officer of the World Bank Group. Joaquim joined the World Bank in 2016, and he was previously the Finance Minister of Brazil, and prior to that was the CEO of Bradesco Asset Management, one of Brazil's largest private banks. Joaquim, thank you for joining us. I would also like to welcome Dr. Belo Lawal Danbata, Secretary General of the Islamic Financial Services Board. Dr. Danbata oversees the IFSB, the global prudential body for Islamic finance. He brings with him an extensive 25-year track record across Asia, Europe, the Middle East, and Asia.
Thank you.
Thank you, Dr. Danbata. Next, I would like to invite Dr. Mohamed Damak, Senior Director at Standard & Poor's Global Ratings and Global Head of Islamic Finance. Dr. Damak leads a team of international analysts and is an expert on the industry. And last, but certainly not least, we have the privilege and the pleasure of having Dr. Luki Al-Firman with us, a senior figure with Indonesia's Ministry of Finance. Dr. Al-Firman is Director General of Budget Financing and Risk Management, a role in which he oversees the country's Directorate of Islamic Financing. It's a great pleasure to have you all here today, and please join me in welcoming the panelists. Now, again, thank you for joining us. Our aim is to explore a range of industry developments and to tackle this mammoth topic. We would like to take a top-down approach, if you will. We will look at global themes, the regional regulatory landscape, the Islamic bonds market, and also touch on very topical, specific transactions that have come to the market recently. But to get the debate going, I'll move on to Joaquim, and just for a bit of housekeeping. We know, Joaquim, you're hosting a plenary session this morning, so absolutely thank you for joining us, but we know that we're a bit pressed on time. So, with that said, we cannot talk about Islamic finance without ignoring the meetings that are happening down the road. And if we have a cursory look at the agenda for the IMF and World Bank annual meetings, we will stumble into a wide array of themes: green finance, financial inclusion, infrastructure, capital mobilization, you name it. In Islamic finance, it ticks many of those boxes. So from the World Bank's perspective, how does Islamic finance fit into these themes, and why is it increasingly important to engage with this sector? If you can give us the World Bank's perspective.
I think Islamic finance first, of course, responds to the need of a very large share of the world population, and as you know, is a share in terms of also of economic presence and so on, you'll be growing over time. So I think that's very important. It was mentioned in the video, the question of increasing, say, financial inclusion. This is very important. But also, Islamic finance is particularly interesting to one thing that is very central to our activities, which is the financing of infrastructure, and in particular, green infrastructure. The clarity about risk-taking and even the structures of not only risk transfer, but risk sharing that is very fundamental to Islamic finance works very well into infrastructure, including PPPs, etc. Moreover, I think that we have very good examples, including here in Indonesia, about how Islamic finance can be put together with the green finance and have a very powerful, say, instrument that responds to the need of a broad range of investors. And here, I think I have to make a point. Probably I'm not the only one to say that, but it's very clear that the attractiveness of Islamic finance goes beyond just for those who are bound by the Sharia law. For many institutional investors, this is a new alternative as long as they fully understand how is it structured and exactly how risk is shared. They realize that it can be very good, and especially for long-term, say, agreement. The HRI scheme, for instance, when you understand the parallel with leasing and how you treat long-stand, say, infrastructure assets, is very, very compelling. So I think that we have a very good experience, both World Bank as well as part of the World Bank, the IFC, that I'm sure many of you know. We have been using Sharia compliant instruments to finance airports, and now in Egypt, also more recently, we had in Jordan. So we do find, like many issues, also that it can be competitive in terms of price, correct, which is also a relevant aspect when you issue a Saqqaq.
Right. So there's that financial muscle that you want to tap into, and also this underlying asset-based element to Islamic finance that makes it appealing not just to the Islamic finance crowd, if you will, but to a much wider investor base.
Yes.
Yes. So, Joaquim, and also to touch on, I mean, you've mentioned your role in the World Bank. Part of your role is that of matchmaker. I thought this is one of your recent blogs, and you talked about how you see yourself, in the World Bank. So presumably, that's a bit of a reference to connecting issuers, projects, intermediaries, co-financing elements, and even credit enhancements. It's this wide array of moving parts. So how is that matchmaking fit into the realm of Islamic finance? How do you see?
Well, as you mentioned, especially when you think about infrastructure, it's an ecosystem, and you need to really create the bridges so that the different actors can really participate and benefit from this ecosystem. One of the common question is let's say the compatibility of the risk capacity of some certain investors, especially institutional investors, and the debt of issuers. And there, I think that actually, as I mentioned, Islamic finance, because of the very front role of the discussion of risk sharing, is helpful. And also, because it's also flexible, and you can combine different types of financing to achieve specific goals, it means that you can use instruments to narrow this gap. Another part of the World Bank, which is MIGA, which is the issuer guarantees, we have issued some Sharia compliant guarantees for projects that were very effective. Right. So I think that it helps in this mechanism. Also, the whole thing of how you do the SPVs and the responsibilities in the SPVs and so on, which I think S&P look very carefully when they are rating a structure. Again, I think that it's evolving and becoming clearer and clearer. And here I have to mention the establishment of standards and our interest in working together. We have IFSB and others, because of course one of the big challenges is still to have the standardization of some understanding and some standards, so that we can have, for instance, Saqqaq that can be easily traded across border, can be global, etc. And this is, of course, not unique to Islamic finance. We've been spent the whole year at the G20 discussing about standardization of contracts, etc., in infrastructure. But I think that for a market that is already like more multi-trillion dollars, but in some cases has still quite small penetration. In Indonesia, it's less than 10%, about 5%. Turkey, another major Islamic country, it is still also around 5%. It shows that if you are in 2 trillion, we could be quickly in 4 trillion or something like this, especially if this understanding become more aligned across different jurisdictions. And here the role of IFSB is absolutely fundamental.
Correct. So there's substantial upside in terms of the growth of Islamic finance across several markets. Yes. And you mentioned flexibility. I mean, you know, the World Bank through this Treasury unit has in fact worked on a vaccination as Saqqaq. So its experience is quite practical as well, and it's found that flexibility useful in you know, tapping the market with a particularly fascinating transaction which combines sort of this, you know, these ethical elements and Islamic finance elements, you know, all rolled into one. So,
absolutely. IFM is a platform where we raise money so that we could accelerate the purchase and development of vaccines. This was with the help of some donors, but basically went to the market, raised all the money, and then over time donors will pay back. So with this you could structure actually 2 Saqqaqs, slightly different, but that would be related to real assets. The vaccine, like you say, is ethical, is super positive, but also, of course, looking at the strength of the platform, IFM, which was rated, I think S&P also rated, it was AA, so it was a very solid instrument, and actually, again, it's another example. You see, in terms of geographic distribution of this bond, about 70% were in what you call Middle East, North Africa, and the Islamic region, and 30% elsewhere. But when you look even in these geographies, it was a very diversified investment base, where in many cases, even in these geographies, we would have normal non-Islamic accounts purchasing these instruments. So it shows the reach of this type of instruments. And more generally, I think, let me mention one thing that I think is important. We have partnered with the Islamic Development Bank to do this report. Again, like we all know, explaining is very important for the investment base in general. And here, not only we go to all the discussions about, let's say in theoretical terms, but you have very interesting case studies where you show how you can combine the different types of instruments to achieve very diversified outcomes, exactly because of this flexibility that you mentioned. So like I mentioned, financing of airports and a number of other structures.
In touching on that infrastructure theme as well, we also have to talk about investors, and we've seen a bit of the long-term horizon requirements for infrastructure are slightly different from what we see in the current market for Islamic finance. But at the same time, we see in Islamic finance the growth, even though it's an industry perhaps dominated or predominantly dominated by commercial, consumer banks, and to a lesser extent, but also the Saqqaq market. But we do see growth in sort of the wider range of institutions: Islamic leasing, Islamic insurance, pensions and endowments, so waqaf. So we see growth in these other participants in the market. So, for example, in Pakistan, the largest pension in the country is an Islamic pension. Yeah. And we talk about a market, market share. So again, Pakistan, just to pick on them for this morning, but the market share of Islamic banking assets is about 15% in Pakistan. But when we look at the pension system, Islamic pensions take about 60% of share of the market. So even though it's a small base, we see this emerging, financial muscle when it comes to on the investor side of Islamic finance. So in terms of attracting those,
I think it's a very relevant, and I think that again, Islamic insurance it has a tremendous potential, and it has this aspect of, I'd say, like in traditional insurance, you call mutual approach, that I think more and more is really attractive. People feel that they belong. They think it's something that responds to their needs. So I think that combining the elements of say Islamic insurance to the financing of some infrastructures can really leverage the ability. I would say that it's not unique to Islamic finance, that in a way bonds might still be on a duration that is too short to really fully financing infrastructure. If you think in most emerging markets, this will also be true, which just points to what we were saying, which is the importance of these institutional investors who normally can take longer maturity in their balance sheets.
Joaquim, I understand time is up essentially for you. We just have to excuse you. You have to run to host the plenary session. So thank you for sharing your thoughts. We truly appreciate it. And if you can just welcome me, join me in.
Thank you. I apologize for you.
No.
But, thank you.
Right. No need to apologize. Thank you.
Thanks. Thank you very much.
Dr. Danbakta, if we can move on to you. When it comes to regulatory development, I mean, we looked at the global perspective, but when it comes to regulatory development, there is quite a lot happening region-wise in Islamic finance. So even though it's impossible to pick on specific countries, but if you could give us the point of view of IFSB on the broader themes and priorities that you see across the board, across Islamic finance jurisdictions, that would be quite helpful.
All right. Before I respond to your question, I would like to, for the benefit of those that are not familiar with the IFSB, the International Islamic Financial Services Board, IFSB was established way back in 2002 and commenced operation in 2003. Currently, we have about 180 over member financial institutions. The mandate of the IFSB is basically to develop and issue as well as facilitate the implementation of prudential standards. That's why now among our members, now we have over 85 supervisory or regulatory authorities. And then we have also 8 multilateral development organizations like the IMF, the World Bank, the Asian Development Bank. They are all members of the IFSB. And then the IFSB members now were all over 57 jurisdictions. And then coming back to the question, I would like to, before also to build on what Levi was saying, Islamic finance is no longer a niche. Looking at the figures that we have just seen, it's no longer a niche market, but it's a growing market, a rapidly growing market. But that does not mean that there is no hurdles, there is no stress. I believe Levi has articulated some of the challenges that is facing the industry. But what I would like to add is the perception of the fact that Islamic banking is meant for Muslim. That's one of the problems, one of the challenges. We have to start looking at Islamic finance from the economic value perspective. The value proposition of Islamic finance. It's not all about because it is complying with Sharia, but it's because it's complying with the humanitarian ethics, social justice, and inclusiveness. Now, having said that, the IFSB as an international standard-setting body that developed standards for effective regulation and supervision of Islamic financial services sector, we have been working with the central banks, and we have discovered that there are quite a number of challenges that the regulatory or the regulators are facing. one of the key challenges is basically the capacity. What I mean by capacity is basically the capacity building. Not only for the regulators, but as well as the market players, those that structure the financial institutions that structure the instrument. We have, as he mentioned earlier, in jurisdictions whereby you have 90% Muslim, almost 95, I can say, percent over Muslim, but the market share of Islamic finance is just 5%. And they aspire to reach a kind of significant growth of maybe 15% by 2020. What's the problem? It's basically there is limited products that are there, and this limited products is not independent of the lack of capacity among those that are structuring the product. People are finding it difficult to differentiate between conventional banking and Islamic banking when it comes to the product that they offer, because they don't see it from the economic value perspective, or the marketplace or the Islamic banks doesn't have the capacity to innovate and define products that are based on Islamic finance, based on finance in Islam rather than Islamic finance. Because this is one of the concepts that we have been using, Islamic finance, Islamic finance. If you really want to develop a good product that is going to be sustainable, that is really going to benefit the society in a more Islamic way, you have to look at, or change the definition, looking at finance in Islam. How does finance come in Islam? Then you will be able to benefit from all the good values, the social inclusiveness, the social justice, the economic developments of finance, of Islam in finance. So we have to start looking at that perspective. If they have such kind of capacity to understand the inherent philosophical benefit of finance in Islam, then they will be able to develop the right products and so on. Now, at the same time, the regulators themselves, they are challenged with the relevant expertise, people that really understand the Islamic finance, and then how finance can be properly incorporated and provide some guidance. So this is one area also that I believe is a challenge. Another concern that the growth that we have to address for us to reach this target of I think we can grow up to even 5 trillion by 2020. By the 2030, if we can put the right things in place. Right. The liquidity management instruments in many jurisdictions is a challenge. The regulators come forward, they have interest, they have invested in developing the right framework, they don't have any legal impediments. But there are shortages in terms of the Islamic finance infrastructures that will help them manage their liquidity. Now, that's another aspect of the challenge that regulators face in advancing the growth of Islamic finance. Another aspect of it is actually in terms of the implementation of the standard setting body. IFSB, we work closely with other international standard setting bodies like the Basel, BCBS, and the IED. Currently, we have a joint standard development initiative with IED, that is the Association of Deposit Insurance Corporation, and then the IIS as well. So we complement these standards. But the issue is, how do the regulators that we issue these standards, because we issue prudential standards, how do they implement these standards? So the implementation rate is quite a challenge in most Islamic finance jurisdictions, because one is either there is no, I can't say there is no political will, but there is a serious political will and commitment, but it's more, you still have to go back to the issue of capacity and issue of priority, as well as the market share itself. Because some people look at it, in some jurisdictions, some regulators look at it, okay, I just have 0.5 or just 1% market share of Islamic finance. Yeah. Do I invest more time in building more capacity on that? Actually, it's really relevant, because if we are complementing the work of the BCBS in ensuring that the Islamic financial institutions have the desired resilience, the desired stability, then in that case, the regulators should be able to implement these standards. In addition to that, another challenge that's really stifled the growth is basically the legal framework. We have jurisdictions that has so much interest in coming up with Islamic finance, but the legal hurdle that is required to overcome the legal impediment is very, very significant. So they found it difficult actually to come up with a new robust legal framework that will provide protection for the investors as well for those that institutions that are providing Islamic finance. So these are some of the key challenges.
Correct, and I think for benefit of the panel, I mean, when we talk about Islamic finance, we're generalizing across a broad range of jurisdictions, and ignoring the Islamic finance component, we're looking at jurisdictions that have a wide range of regulatory, shall we say, sophistication or development.
Yep.
And you look at some countries, again, without naming names, but you will look at some that are on the higher end of regulatory development and sophistication, and some others that are at the early stage.
Yep.
So it's already challenging to look at harmonization or sort of looking at that. This would be quite aggressive, and to see a sort of a wide adoption across all the board because of the reality of sophistication across regulators. But also, kind of, you talk about market share. The momentum is linked to that market share. Regulators are not going to might sort of look benevolently at Islamic finance under a 3 to 5% market share and say, well, we're not there yet in terms of adoption or regulation. But we see that momentum kind of gradually, linked to the market share and the growth of market share. We have Islamic finance being systemically important in over a dozen countries. So this momentum is building up, and is that aiding that adoption of standards or adding to the momentum?
Yeah, definitely. We have now actually in 32 countries where Islamic finance has achieved a significant systemic importance. With about 12 jurisdictions having more than 15% market share of Islamic finance in these jurisdictions. And then even the growth that we see for the 2.6 trillion is basically concentrated more on about 19 jurisdictions that have seen a significant increase in market share. Well, now looking at these figures and then seeing the steady growth, that's really pushed most of these jurisdictions to come to us, to IFSB, to request for workshops, because we do organize workshops to facilitate the implementation of these standards. We do provide technical assistance to all these member jurisdictions. We do provide policy advices, and then we do organize capacity building. For your information, one thing that we just initiated is basically capacity building for both the board of directors as well as the CEOs. Mm-hmm. Because we believe that we had discussion with some of the CEOs of the Islamic banks, and some of them have challenges, particularly those that are subsidiaries of a conventional bank. Right. Islamic banks that are subsidiaries of conventional banks, they have challenges getting across their products and their initiatives across their board of directors. So what at the IFSB level now we did is actually we introduced a new capacity building program that is very high level, focusing more on risk management part, because I mean the stagnation that people comment is more on the product and in terms of the financial services structure that we currently have. Mm-hmm. We don't see the banks getting involved in more of profit sharing arrangements or profit sharing products, or basically what we call the mudaraba, profit and sharing, loss bearing, kind of, because of the risks. Why? The Islamic banks managers or CEOs, they may see a potential business, but because of the nature of the risks and the fact that this risk management responsibility is being pushed down from the board of directors, left with the CEOs, they have this kind of, some kind of phobia. They don't want to take that risk because at the end they will be to be blamed. So what we do now is actually at the IFSB, we are the first session of this program. This is the first one that we're introducing, will be conducted toward the end of this month in Kuala Lumpur in Malaysia, whereby we invited CEOs of our member jurisdictions, our members of Islamic banks in our members, and then their board of directors, to come and sit down, and then they understand and articulate the prudential requirement with regard to risk management oversight as well as corporate governance. All right. And at the same direction, we were trying to facilitate more of the implementation by getting our members to sign an MMOU in terms of the implementation, to ease the implementation with a clear timeline that we hope that if this is being agreed by all our members, then the implementation will be more, and then you will see the figures definitely will be a little bit more higher.
So there's positive signs in terms of seeing a cascading effect.
Absolutely.
From directors and risk managers into the bottom line and to the actual products. Okay, thank you, Dr. Mohammed, if I may switch to you, we can't talk about Islamic finance without touching the Sukuk market, and one of the most visible segments of the industry, obviously, but also arguably one that has seen some of the most debate as well in recent years. Part of it due to legal disputes and restructurings and you name it. But that debate, I guess, has not been in vain. I mean, it's an endless, perhaps, debate, but it's not in vain. We have seen that some notable changes in the Sukuk market recently, and if you could just touch on some of those changes and what is driving those changes in the market.
On the Sukuk market, what we saw in 2018 is a slowdown in terms of volume of issuance. Last year, the Sukuk market saw something like $97 billion of total issuance. This year, our base case scenario is that the volume of issuance would be something between $70 to $80 billion. At the end of September, we were at $67 billion. Now, why do we think there will be a slowdown in the Sukuk market? Number one, global liquidity is tightening and is becoming more expensive. I think the Fed has increased the interest rate, the ECB is reducing its asset purchase price, and as we heard earlier from Joaquim, when issuers do a Sukuk, they not only speak to the Islamic investors, but they also speak to the conventional or fixed income investors. And we did a study on who is investing in Sukuk, and typically you have around a third of the investors that would come from Europe and from the US, or the investors that are not there really because of the Sharia compliance of the instrument, but because of its fixed income nature. So global liquidity is becoming more expensive and is becoming scarcer. The second reason why we think that the Sukuk issuance is dropping is the increase in geopolitical risk, particularly in some core markets. In the GCC, for example, with what happened between the GCC countries, Iran, these are all factors that are getting the investors' attention. And for each and every investor I spoke with over the last 12 months, the first question is, what about geopolitical risk? How is it going to evolve? Now, the good news there is that our base case scenario is that there will be no escalation. We think that the market today understands that the risk is there. It has increased compared with the past, but it's not expected to increase any further. The third reason is, if you look at who is issuing Sukuk, the GCC countries play an important role. Now, in 2017, we've seen some jumbo issuance from some GCC countries, including Qatar, including Saudi Arabia. And this year, we saw lower amount of issuance, and that's because, number one, the financing needs of these countries are dropping because of the increase in oil price, and also because of the policy response they've been implementing following the significant drop in oil price. And we estimate that the volume of commercial debt issuance by the GCC countries will be 15% lower this year compared with last year. And the final reason why we think there is a slowdown in the Sukuk market is the slow progress on standardization. Now, when I talk about standardization, there's two aspects to it. There's the standardization of Sharia interpretation and standardization of the legal documentation related to Sukuk. Standardization of Sharia interpretation, I think we've seen a demonstration of the materialization of this risk with what happened with one company in the UAE, where they used the argument of Sharia compliant to trigger a process of restructuring of their Sukuk. On the legal documentation, I think the market has achieved a certain level of standardization, but we're not yet in a scenario where it is as smooth and as easy to issue a Sukuk compared to the conventional bond. And we saw that happening especially in 2015 and 16 when the oil price was dropping and when everyone was expecting a windfall of Sukuk issuance from the GCC countries particularly. The windfall happened, but it was on the conventional market. And the reason is simple, because it's much more complex to issue a sukuk. So if you go to the Minister of Finance of a GCC country and tell him, listen, there's different solution for you to finance your deficit. It's either you do a bond, you get the money in a couple of weeks, it's going to cost you 3%. You do a sukuk, you might get the money in a couple of months if you're lucky, or if you're a frequent issuer, or a few years if you're unlucky, or if you're new to the industry. And it's going to cost you, it can cost you 2.7, it can cost you 3. We've seen some sukuk being priced in a more competitive way compared with conventional bonds. And the third option is to do a sukuk with pure profit and loss sharing. And here it's going to take you a few years, definitely, and it's going to cost you much more. So in 2016 and 2015, we've seen a natural move to the issuance of conventional debt because it was the easiest solution. Now, how do we move forward from here? I think standardization is important, and standardization has to happen. And I think, as Dr. Bello said, the problem is not the lack of standards. We have the AOEF working on Sharia standards and have been extremely busy coming up with Sharia standards. We have the IFSB that has came with a significant number of standards for capital adequacy, for disclosure, for capital market instruments, and etc. But the problem is we have an enforceability problem. And this is why steps like the ones that was taken by the Central Bank of the UAE, making the AOEF Sharia standards mandatory for all the Islamic banks operating in the UAE, are definitely steps in the right direction and could help the market to move forward.
Correct. So it's I mean, standardization has been a theme in Islamic finance forever. But again, it's not happening in a vacuum. We see this regulatory change. So as you mentioned, the UAE and the central bank, but also the capital market regulator has introduced more specific requirements when it comes to for sukuk transactions. So there is change, and that is driving change in the sukuk market in terms of the issuance but investors are also sort of, in terms of disclosure requirements, investors are also knocking on the door and making an impact, because we've also seen issuers, sukuk issuers, who may not have, from multilaterals, for example, like I would think the private sector arm of the IDB, for example. They've made, they don't fall under any regulatory, regulator of Islamic finance, but they made a point of highlighting disclosure requirements and the fine print, the legal aspect of documentation as well. So we've seen there's an issuer-driven element as well.
Absolutely. There is an issuer-driven element, there is an investor-driven element as well, because again, if you look at who is investing in sukuk, there's a lot of investors that come to sukuk for their fixed income nature. So it combines fixed income nature with the Sharia compliance nature. And here, for these investors, it's important for them to understand the risks. So one of the debate that has been ongoing for Islamic finance is the push for more profit and loss sharing into the transaction, which is a healthy debate and which is something that might happen in the future. But the biggest challenge is not to sell a product with a pure profit and loss sharing as a fixed income product to the investors. Yeah. Because investors might find themselves in a situation where they lose money, they have no recourse, and in this case, it's the overall credibility of the sukuk market that could be put in jeopardy.
All right. Dr. Al-Firman, I've saved you for last. It's my fault. But with many of the themes that we looked at, they all sort of combine into your experience and the experience of Indonesia, because we've seen many of these developments crystallize in Indonesia's green sukuk, which was issued earlier this year, 1.25 billion worth of sukuk. Could you share with us some of the backstory behind that transaction, and for example, why considering a green sukuk, why now, and the various factors that came into play in that transaction?
Yes, we did issue the first sovereign green sukuk bond this year, early this year in March. The rational objective of this green Sukuk is multifold, actually. First, of course, this is part of government commitment toward climate change. So we have ratified this Paris Agreement 2016, and we also have submitted what's so-called NDC, Nationally Determined Contribution. So basically, it's kind of to show this is what government is going to do, right, in supporting this climate change in green development. And then, of course, for us, it didn't happen overnight. It was kind of a long journey, and it's not finished yet, I would say. So we started with what's so-called budget tagging. So because later when we're talking about green bond or Sukuk, right, they need some kind of underlying projects, underlying assets. So what we did first, back in 2015, actually, we started with this, the project called budget tagging. We identify all government projects, all government programs, right, that can be classified as green, and also the impact, right, of this development toward this, this green gas emission and so forth. Right. And we didn't have expertise, we didn't have experience, so it's good to have, let's say, a partner or advisor to help us in this area. So we work together with UNDP in this case. So that's the first step. The second step is to develop what's so-called green framework. Okay, so Indonesia has been a regular bond issuer for both conventional and Sukuk. So in that case, in the context of this green framework, we open this possibilities, option for both conventional and Sukuk. And the same thing here, we work together with our, in this case, SBC, right? And then, more importantly, at the end, it has to be reviewed by, and our framework, our green framework was reviewed by Cicero. So we use this, reputable, credible institution, which is Cicero from Norway. And they look at this green framework, our green framework, we're talking about the project selection criteria, the use of proceeds, things like that. And then the Cicero granted us with what's so-called medium green shade. So at that time, we were ready. So the option, as I said, it can be green bond or green Sukuk. Mm-hmm. So again, this is kind of pro and cons, positive and negative. So green bond, at that time, some sovereign already issued some green bonds. Right? So we know, we can learn the experience from them. But at the same time, when we're talking about Sukuk, we are largest Muslim countries. We look at the potential of this Islamic finance is so huge. And then we discuss a lot. And then, look, we decided at the end, hey, let's go with this green Sukuk. The similarities for both this instrument, green in Sukuk format or Sukuk in green format, right? So both need some kind of underlying, right? It can be project, can be ongoing project, can be assets. So at least it's quite easier for us in that case. But the challenge, on the other hand, we know very well, perhaps type of investors are quite different. So not that many, for Sukuk investor already kind of green aware, right? On the other hand, perhaps green investors mostly right now are in Europe, for example, they don't really know or not familiar with this Sukuk. So that's the challenge, but we were fully aware about this challenge. So that's why the next step, and we decided to issue this green Sukuk, roadshow is very important. So because we had to meet face-to-face to convince our investors. So Sukuk investor, we are okay because, as I said, we've been a regular Sukuk issuer. So they know us very well. But green is something new. And this is combined with, as I said, Sukuk. So we went, my ministers, Mr. Sri Mulyani, our Minister of Finance, also joined us with in this roadshow in some cities, right? Again, to meet with the investor to convince that, look, this is government commitment, government of Indonesia commitment towards this green, but the paper is in Sukuk format, something like that. Mm-hmm. So just, it's not really this is our experience, right? It's quite funny. So when we went to this Middle East and Islamic, economy like Malaysia, for example, yes, when we met with this investor, their question mostly were about this Saqqaq itself, the structure, this process, things like that. And then we went to these European countries, cities, Paris, Amsterdam, hardcore green investors.
Right.
And I remember I met one investor. This guy jumped straight to question on green. Okay, didn't really care about this credit story, right? So they just how serious we are about this green project, right. What kind of project, right? Things like that. So it's quite interesting actually. And of course, long story short, the result is we were able to issue the first green Saqqaq bond in March. Okay, another thing. If you remember, so we were finished with this roadshow in February, early February.
Yes.
And then that's when market became or started becoming shaky,
Mm-hmm.
So we had to wait until 3 weeks, right, to find the right tiny window to enter the market. And the result is quite good. So we were able to print this 1.25 billion US dollar short tenor 5 years. And we were able to get 29% new green investors. Okay, so you look the proportion, the share around 33% is European and American US investors. Another 33% is Middle East and Malaysia, and another 33% is Asia, including Indonesia. It's quite balanced, but 29% of them is basically new green investors.
Yeah. Right.
But another challenge, as I said, is not over yet, because when we issue regular bond, when we issue the bond, right, that's it. Now, for the green bond, we still have obligation, which is producing the report.
So there's a fair of groundwork behind the green Saqqaq, but it's not for nothing. I mean, there's more moving parts, more elements, but as you said, in terms of the pricing, in terms of attracting new names into your portfolio, there's some trade-off always with complexities, but it's paying off. I mean, you've seen the benefits.
See, because this is the debut, right? This is the first issuance. So, to be honest with you, at that time we don't want to be that ambitious, because this is kind of the first issuance. Mm-hmm. Our target at the time was to tap new investor, expand our investor base, basically, right? Yes, however, at some point we would like to have lower yield, right? Lower cost of fund, because to be honest, again, issuing this green bond is also costly, preparation, and also afterward, as I said, we need this to produce report, right? So compared to this regular bond, is more work to do, of course.
But if you build the framework, you've gone through that.
Yes.
That first that first experience.
Yeah. But however, the second one is, of course, as I said, we would like to have this lower yield. That we don't see that at this point, right? So that's what we are working on right now. Of course, right? Hopefully for the next issuance, right? So we hope that, look, Indonesia has been seen, right, as now we are very committed with this green initiative, this green development, right? So we issued this green paper. For another thing, for example, we just got this recognition award from Euromoney last September for the best deal of the year for this SRI green bond, right? So this is another recognition that Indonesia is doing the right thing.
So
right?
There's room for future issuance, and you look at the green Saqqaq as a permanent fixture in terms of Indonesia's issuance calendar. Then is that?
Yes, for sure. So, however, for this year, we would like to complete this one cycle, we call it. Right? So, because again, we don't have this experience, so we want to know about, again, producing report. The problem is, or the challenge is that we need to coordinate with other relevant ministries. Coordination is the key now, because the execution is not under Ministry of Finance, Ministry of Energy perhaps, Ministry of Environment. So, and then we would like to have a system rather than just producing one-time report. So we design a system in such a way that can be, because we anticipate that it will be done repeatedly, right, in more regular basis. So once the system is kind of in place, so I think we are more than ready. So as I said, we have options now.
Yes.
We can continue issuing Saqqaq, green Saqqaq bond, or we have option also to issue just regular green bond. Is open.
So that first hurdle is that the hard part, but now you have you open yourself to more opportunities. If there's any questions from delegates, we have one question, and we can bring the microphone, please, to the.
My name is Loto from Government Debt Securities, Ministry of Finance. I get maybe my question go to Mr. Damak. If not false understanding, if not mistaken, you suggest because of the biggest portion of Sukuk instrument right now in fixed income products, and then you suggest that we should to increase the combination of fixed income product with profit sharing product. So my question is, what kind of structure of this product, where already, in which country that already issued? So maybe it's important for us to know, and then how big the share of this product compared to the total of Sukuk product. Thank you very much.
Thank you. I think what I said earlier is that what the market should avoid is a situation where a Sukuk with pure profit loss and sharing is being sold as a Sukuk similar to a fixed income instrument. Now, on your question, what is the size? Have we seen Sukuk with pure profit and loss sharing? The answer is yes. The structure that has been used is the Mudharaba structure, and it has been primarily used as a capital boosting instrument, like the Tier 1 Sukuk issuance that were done by some GCC banks. And I think if you look at the last 3-4 years, most of the capital increases that happened in the GCC banking system were in the form of Tier 1 Sukuk issuance. So the product is there, it worked, it has attracted a lot of interest from the investor community. Some of the investors, some of the Sukuk have been heavily oversubscribed and priced quite aggressively compared with fixed income instrument. But fundamentally, I think the way the market should evolve is in a situation where all the compartments are served. So you would have the fixed income type of Sukuk, you would have the Sukuk with pure profit loss and sharing, you'd have Sukuk with combination of the two structures, but the risks have to be clear to the investors from day one. And as far as we are concerned, the way we rate these transactions, so if we were presented with a Sukuk, with a hybrid Sukuk, with profit and loss sharing mechanisms, these Sukuk would not achieve the same rating as fixed income Sukuk, obviously because the risks are higher.
Gentlemen, thank you very much. Time is the enemy, isn't it? We could spend, would love to have you guys here all day long, but yeah, we're just very pressed on time. But thank you so much for sharing, your knowledge and for helping us, highlight quite a fair bit of themes for follow-up. So with that, I would like to invite you all to join us for a breakfast next door. But before that, a big round of applause and my sincere thanks to the panelists for their valuable contribution. Thank you very much. And thank you to Qatar Financial Centre, our sponsor.
Thank you.
Thank you so much. Thank you, everyone.